Hello everyone, it's Hiền Nguyễn from ST Consulting. So, in my previous video, I have shared with you the overview of Vietnam capital market. And today, in this video, I'm going to start to dig deeper into the banking sector and the bank credit market. If you are looking to do investment or to do business in Vietnam, this is the right place for you to start. Let's get into it. So before I go deeper into today's topic, let's look at the overview of the banking sector. I shared last time in the capital market overview video. If you already saw this part, you can skip this section and go ahead with a new section, okay? Bank credit is largest portion of Vietnam capital market. Banking sector is larger now, better and capitalized, and it offers a wide range of products and services that reach a much larger share of population compared with 20 years ago. Domestic bank credit has reached over 165% of GDP, or it is 3.2 times higher than the bank credit to GDP ratio in 2004. The Vietnam economy has a large GDP growth each year in the last recent decades, right? And the bank credit growth is at a much faster rate. The credit growth rate in the last 15 years, as you look into this chart, is mostly in the range of 10 to 30%. How about the private bank sector? Private bank credit is 123% of the whole country GDP in 2023, just right now. And it is over threefold compared to the bank credit to GDP ratio also in 2024. The chart of banking credit over the last 30 years show dramatic growth in the development of the market size of this banking sector, bank credit in Vietnam. You see that the banking sector has been developing and the size has increasing a lot in the past few decades. It's rather for working capital requirements and consumer credit, not much for long-term productive investment. And also remarkably, the state-owned enterprises account for most of the corporate borrowing. Okay, government bonds make up a large share of total commercial bank assets. Yes, the bank get the deposit from the depositors and put a lot of the investment into the government bond. So I will discuss more details of the quantity and quality and the development of the Vietnam banking system and Vietnam credit system in the coming. Let's dive into it. So currently, Vietnam size of the credit has higher level compared to Thailand and Malaysia, and 3 times higher than Indonesia and Philippines in the measurement of the GDP. And the credit to private sector has also increased dramatically over the last 10 years, as you see in these charts. are the Vietnamese commercial banks' sources of funding? Main sources of funding for Vietnamese commercial banks until now are still deposits from individuals and institutions. Banks are not able to mobilize additional sources of funding since the debt market in Vietnam has only recently developed. Taking the top 5 Vietnamese banks, this study shows that deposits from loans from other credit institutions account for about 80% of the funding streams, while around 5% of the total funding between 2011 to 2021 was attributed to valuable papers issued and the equity to total assets ratio. What does that mean? That means that the assets of the top 5 Vietnamese banks are mostly funded by deposits from customers and deposits or loans from other credit institutions. Moreover, there has been an upward trend in Vietnamese commercial banks' deposit to total assets ratio from 2011 to 2021. At the top 4 banks like BID, VCB, CTG, and STB, only the Techcombank has experienced an opposite trend, drop from 84% in 2011 to 75% as 2021. So let's look into the Vietnam commercial banks loans and advances by industry. Regarding those industries to which commercial banks offer loans, manufacturing firms and personal and public services are the primary clients of banks. This table shows that these two sectors occupy more than 40% in the total value of the loans and advances offered by commercial banks in Vietnam. Let's look at debt securities purchased by Vietnamese commercial banks. Okay, debt securities among commercial banks in Vietnam occupied a very small proportion of the total assets of the top 5 Vietnamese commercial banks during the period of 2011 to 2021. This table shows that in 2021, TCB experienced the highest ratio of debt securities to total assets among the relevant commercial banks. However, the number was still very, very small, less than 1%, 0.8%, and the ratio for STB has been 0 for many years. So what are the bank debt securities classification for Vietnamese system? 5 different types. The first one is government bonds. The second one is government guarantee bonds. The third one is securities issued by other local credit institutions. And the fourth one is securities issued by other local economic entities. And the fifth one is foreign debt securities. Vietnam government bonds have generally made up the highest proportion of the total debt securities of the top 5 Vietnamese banks. To be precise, there was an upward trend in the rate of the government bonds from less than 46% in 2011 to 75% in 2015, and also when it peaked, the peak year is 2016, is over 88%, and then after that we experienced a drop to nearly 72% in 2022. However, government bonds still make up a major proportion in the debt securities portfolio of the top 5 Vietnamese commercial banks. So let's look into debt purchase and sale by commercial banks in Vietnam. The State Bank of Vietnam allows commercial banks to buy and sell debts to and from other credit institutions. Okay. Under the framework provided by the Circular Number 9, 2015, this circular describes the procedures for purchase and sale of debts arising from lending operations of credit institutions and foreign banks branches. According to this circular, debt purchase and sale occurs by means of a written agreement to transfer of a credit right to claim the debt arising from the lending operation, or a debt to be paid on the third party's behalf in the guaranteed operation. The debt seller accordingly transfers the credit ownership of the debt to the debt purchaser and receives a payment from the debt purchaser. Thus, the debt sellers include credit institutions and foreign bank branches that have debts which meet the above mentioned conditions. Like in terms of the debt purchasers, they should be a credit institution or a foreign bank branch which has been approved by the State Bank of Vietnam for debt purchase activities as stated in the establishment of the operation license. Its non-performing loan, like bad debts ratio, is be under 3% except in cases of debt purchase under the approved restructuring plan. Like in some cases, bank in trouble, the government go to do the restructuring. Despite the State Bank of Vietnam allows commercial banks to buy and sell debts to and from other credit institutions. Debt purchase activities are not common among commercial banks in Vietnam. Non-performing loans, NPLs for the short form. In terms of non-performing loans, banks can sell them to the Vietnam Asset Management Company, which is in short is VAMC. At the time when the Vietnamese bank's bad debt ratio exceeded the safeguard threshold set by the World Bank, the Vietnam government set up a VAMC to save the economy from the risk of breaking down and insolvency in 2013. The State Bank of Vietnam launched a number of circulars in 2013 and then 2019 and then also 2017 circulars to support the VAMC. Regarding VAMC's role, by acquiring bad debts from banks and other financial institutions, VAMC was expected to contribute in part to improving the credit quality of banks as well as loan companies. This enabled capital to continue to flow, helping to restore the business operations in a difficult period. However, by the end of 2016, the total amount of unresolved debt sold to the VAMC was over 224 trillion Vietnam dong, accounting for 85% of total NPLs and for around more than 4.3% of total outstanding credit. Therefore, up to now, the VAMC model is still contentious with regard to efficacy. Some salient points of the debate being: first is that the procedure for selling and recovering debt is still low and is hampered by a lot of problems affecting the progress of debt recovery. The second one is that the handling of the commercial bank's debt is still deadlocked because VAMC cannot sell or handle the bad debts that it has bought. This figure shows NPLs for among the banks in Vietnam from 2009 to 2018, starting at 1.99% in 2009. This ratio dramatically increased before reaching a peak at 4.08% in 2012, followed by a gradual decrease to 2.55% in 2015. From 2012 to 2015, the figure of NPLs as a proportion of the total outstanding loans was lower than the international standard of 3% in 1 year and from that time. However, according to the National Financial Supervisory Commission, of a total 180 trillion Vietnam dong in NPLs handled in 2015, 110 trillion was sold to Vietnam VAMC. About 30 trillion was deducted to provisions at the commercial banks, and only about 40 trillion was recovered by other methods dealing with the bad debts. Very small proportion, right? 20% of the total NPLs. This means that official reports regarding to the ratio of NPLs to total outstanding credit couldn't be considered to represent accurately the current situation of NPLs among Vietnamese commercial banks, since the NPLs were only transferred to VAMC to wipe the balance sheets of the commercial banks. In addition, the fact that NPLs were quite concentrated in the real estate sector, yes, and The NPLs were mostly secured by real estate assets, were two factors that had a significant impact on the ability to repay the debt and seller collaterals, So it's stuck there. That's a big problem. So how is the quality of Vietnam credit system, banking credit system? The Vietnam banking system looks good in quantity, as I just showed you, but it is weak financial channel for economy as following reasons. First, bank lending is overwhelming with short term, largely for working capital requirements or consumer credit. The second one is that state-owned enterprises account for the large proportion of the corporate borrowing. The government bonds make up a large, unknown to us exact number, but a large share of the total fixed income securities owned by the commercial banks. The loans and advances from individuals have increased rapidly from only 20% to nearly 50% over the last 11 years. And the second problem is that the lack of quality third-party agencies. The creditability of domestic banks and, as in the case of corporate bond market, the lack of coverage by reliable credit ratings agencies are also obstacles to the development of the banking system. Other non-bank sectors of the financial system experience a high growth rate, but not yet efficient channels for firms to mobilize large and long-term finance. Later on, we will discuss about all other non-bank sectors. Indeed, in Vietnam, the equity market is still very small. The stock market is not viable financing option for private companies given its lack of liquidity. So we will discuss much in depth later about this. And also even the corporate bond market is even less active in Vietnam, and it's only established recently, and mostly concentration in the real estate. In the later videos, we will discuss about this also. Moreover, securitization is not yet available in Vietnam because of the absence of enabling regulations. In the coming video, I will discuss in depth of the equity market for Vietnam capital market. And if you are interested in doing business in Vietnam or in investment in Vietnam, then you can look at my previous other video about the Vietnam macro and also overview of some sectors. Have a productive day. Bye-bye.
To be a good investor, from my own experience, following are the first important steps you need to do. 1. Prepare yourself by learning investment knowledge through reading investment, financial and accounting books from famous and successful investors. 2. Apply and practice your learning and find the best strategy that works for you. 3. Before you find the best strategy that you can make successful investment, diversify your investment portfolio and do not put all the eggs in one basket. Remember, no successes come without failures and pains. So training yourself to practice patience is very important. I hope you get some insights and learn something new from this video. Please subscribe my channel for more future videos.